All right, folks. We're back again with a part two to the initial video where we threw on our Bollinger Bands. So we're back here at Apple, and we have our Bollinger Bands that we set up in the previous video with the 2 standard deviation, 20 simple moving average on our yellow line, and the top side's red, bottom side is white. And so in our last video, we talked about setting up or utilizing the bands as triggers for trades. So what I wanted to do in this particular video real quickly is talk about setting up a trade. And let's say we're going to do some calls and puts based off of where we see Apple on the Bollinger Bands. And for simple purposes, let's go and do November. Let's start over here in the November area. Or we could also start over here at 1013. And we're going to utilize the ThinkBack tool in Thinkorswim. So the ThinkBack tool in Thinkorswim is right here on the Analyze tab. And you can scroll down and do ThinkBack, or you can just click the Analyze, and then ThinkBack will be one of the selections here. And since I'm generally always on it, this is the tool that we could use. I have some other stuff from doing some stuff on ARKK, so we're going to close these out. And we are going to pop up Apple in the top left box to pull up the option chain. Let's get rid of the underlying graph down there. And we're going to select the date. So if we go back into our chart, and you know what, let's go ahead and do it all the way back here to September. So, and actually, in addition to that, let us do 1 year so we can really see this. So look at that really good uptrend, right? And it's an uptrend because what you're doing is you're seeing higher highs and higher lows, right? Even starting all the way back here, Apple was, and this is the time of the split, but Apple was a lot more than it's $79 at this point. But what it was doing is creating higher highs, higher lows. And then it did some sideways movement, boom, it created a higher high and a higher low to where it bounced. And if you recall what I mentioned in that last video about it liking the 20 EMA, simple moving average. So you see here, it's bouncing off the 20, creates a new high, comes back, practically bounces off the 20. Had some sideways movement for a good, 2-3 weeks there. And then the EMA really moves up on the line and it bounces up again and then it comes back. So it creates a higher high and a higher low. Why is that a higher high? Well, it's higher than the previous high and the previous high, the previous high. And this is a higher low because it's higher than the previous lows here and the previous lows here. So you have higher high, higher low, higher high, higher low, higher high. This one is really not that much of a pullback. It's really sideways. And then at this point is really where it kind of broke the higher low trend and came back down to the band. So it was riding the top side of the band and it came back to the lower side of the band. And then the following days here, we had earnings that they pretty much blew out the water and everybody was like hip hop hooray. But if we fast forward time, you can see after, takes its dip, then after earnings just explodes, creating new highs, new highs, new highs. And in September, which tends to be a dull month overall in the market, it does a significant pullback because it's really running up from here. So when you think about it too, let's look at it from this perspective. Back in, where are we at? This is March, so at the end of coronavirus. We had, or Apple had, a run of, let's just do from this point to its earnings, the day after earnings. It had a significant, oh, it's not even showing it. That's the thank you for not doing that. Not. I think I did from here to here. You see in that blue box there? That's a run up of about 89%. And then it created even higher high of 131% just from where it really starts to recover in late March to the beginning of September. Apple went up $78, 131%, price increase. So even when you're picking things here, you know, this is a 33% increase, but it's in a steady uptrend. And then you just kind of get this explosion and then this real exponential move in a sense here that you could anticipate some kind of pullback because it just hasn't rested from going up, 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 and up. So that's another good indicator of saying, all right, we've had such a significant run and the percentage increase from the last significant low, you know, back here, really when it started its recovery is 130% increase. So you could say to yourself, now it's outside of the band. This should definitely have some significant pullback, and you would have been right here. But then also too, there's the fact that, as what it seems in September, it doesn't always have the market in a sense pulls back in September a lot. I think there's some seasonality to that, but it would also support that there will be a pullback coming. So this is what you're seeing here, in this pullback from the bands, and it comes back, and then it's on the bottom side of the band, and then we begin to get a pop up to where it just starts to resume its uptrend. And so we have the trend line on some higher highs and higher lows from over here that really coincided with lines back here, which is pretty cool. And that's why you should draw trend lines to help identify support and resistance or even buy points. So if we go with just utilizing the band, and I said, let's go with this November date. What we're going to do in the ThinkBack tool is go back to that date. So what date was that again? That was, here, that was November 3rd. So on November 3rd in the ThinkBack tool, you would take your calendar back to that date, 3rd. And now it's going to pull up the option chain based off what was there that day, end of day. And since we're at the bottom side of the band, we're going to do a put. We're going to do a call. And on this call, we are going to do, let's do some short-term stuff, okay? When I say short-term, I'm looking at 3 to 6 months here. It's not do long-term, but let's say you're trading, right? You're swing trading. So let's do 3 to 6 month option call on this one. And so from this date, looking 3 to 6 months out, you're looking at, what do we have? We have January 5th. We have January. We also have February. So let's go ahead and pick the February 19th one for a 3 month out. And then we'll also pick a 6 month out, which would be around 180. So we'll do this 164 for April. So February. And for simplicity purposes, let's just pick an at the money strike, meaning we're going to pick a stock. Apple on that day closed at 110.44. So let's just pick an at the money stock. When you do ThinkBack is based on the price of the closing day. So that means these are the option prices as it was at closing of November 3rd, 2020. So let's go ahead and just select at the money 110. All right, so we would say, okay, here, we're gonna buy that one contract. The median price was $9.52. So that's what we're looking at for this particular trade. So then since we're doing 3 months, we do only anticipate being in the stock or being in the play about a month to a month and a half. We really want to get the move and an exit so we could take profit. Same case with the 6 months. So if we go to, what was 180, so we got 164, that's pretty close. We're gonna do April. Again, let's just do the at the money. As you can see, it's a little bit more expensive by like what, $2? $2 a contract more expensive. So we have one contract in each and we're doing good. And so we can get ourselves thinking big. Let's do 10 contracts. It's what we know that to be is 1,000 shares. So 9.52 times 1,000, 9,500, and 11.37 is $11,000 on those contracts. So let's look at the chart real quickly though. So we have it where it's moving from, we're over here. We have it where it's moving off of the bands, and we want to set a target for ourselves. Now for this one, we have 3 months. So a month and a half from November, that'll put us out to, yeah, like December 15th. And obviously we see the future. So you know what it's looking like potentially, but we'll go through each day. And then for the one that expires in April, we have 6 months. So really we could be looking at this one from, what's the word I'm looking for? From November to, what would that be? February? Yeah, maybe February this month. So we entered in on this day here, and we're gonna ride it up. So we'll see that, of course, we're not gonna get the price here of when it hits very close or when it's close to the band because it's based on closing day, so it'll be here. But we could take a good gander at what those profits will be like when we're here. So let's skip a few days ahead to the 6th, and then let's go to the 9th, and you could see what the profit will be on the ThinkBack tool. So the 6th, nice, and then to the 9th. Give me the price on that. Okay, pull back, right? That changed, right? So there's a price on the 6th, it's 4,000 there, and then the price on the 9th, and then we're down to 2,000. So on both of these calls at this point on the 9th of the month, in this case, we put in 11,000 and we have a $2,100 return on this one. So let's go to calculator, 2,100 divided by 11,375. So we're at an 18% return on our April expiration, and we're only about a few days into this one. And then for this one here, divided by 9,525, we're at 26% return on the one that's shorter. So as you can see, when you're picking an expiration that's closer to the date of your purchase, shorter term, you're going to get a larger percent return from a, in some cases, definitely from a financial, as in dollar amount point of view, but also from a percentage point of view. And that's just because it needs, you know, it needs to do its thing faster to get there. And on this day, we're sitting at, what's the price? We bought the 110, and now on the 9th, we're sitting at a price of 116. So you had a $6 move that day, and that's pretty nice. Imagine what it would have been when it was at the 120. So let's go out a few more days and take a look at November 16th, where we close at about $120.39, okay? So what's this day again? I just said it and forgot it that fast. November 16th. So let's go, November 16th. And take a look at the numbers over here and how they change. The 10th, the 11th, nice. The 12th, the 13th, the 14th, the 15th, this must be the weekend because it's not changing, and the 16th. And so now we're here for the 16th. All right. So interesting stuff here, right? Your profit difference is only about 75 bucks at this point. Now you did put more money in on your April expiration than you did your February. And so your February is still beating, you know, your April expiration by $75. But let's go ahead and take a look at the percentages. So we have for our April, 4,775 divided by 11,375. So you got 41% profit on your April expiration. Good stuff, right? And this is just from November 3rd to November 16th. So what is that? That's almost 3 trading weeks, right? That's 13 days. So that's almost 3 trading weeks, 2.5 trading weeks. And for this one, so that's 40-some%. This one would put you at 50%. So see higher ROI on your February. and you'll see a lower ROI on your April, and you also see a higher amount in profit on your February than on your April expiration as well. But at this point, right, 40 and 50% are really good returns, because there's some people who don't receive 40 or 50% in the entire year in their entire portfolio, right? And so that's some really good returns. And if you're trading stock at this day, you could be saying to yourself, well, you know what, I'm close to the bands, and it doesn't seem to be breaking this previous high here after it's pulled back on my trend line and from the bands. If you were to say to yourself that you were going to take profit because you're not too sure what's going to happen next, because it went up, came back, pulled back up a little bit, and now you're sideways for 3 days, but you can't break this high. If you said that you were going to exit and take your profits at that point, that would be very legitimate, in my opinion, to be able to take your profits on this particular day and say to yourself, hey, regardless of where you're at here, if you did the February, you're up 50% on your money in 13 days. If you did the April, you're up 40% on your money in 13 days. Great trade. And of course, you do have more time that you can put into this trade, because you wouldn't necessarily expire this one until, what's that? Mid-December, and we know where that leads to, but it's still a really good trade at the end of the day if you were to exit there. No issues. Besides, too, it's your plan. So if you set your plan up accordingly to where when you reached a return on investment target, right, when you reach your 50%, if that's what your goal was, you can say, I've reached it there. Let me set up a stop loss to lock in whatever the price is to ensure that I get my 50% on my trading from this trade according to my plan. Or even you can set up a trailing stop to where if it was 50% and you said, all right, it got to 50%, I'm gonna put a trailing stop here that's 5%, 5% below of where that 50% target is. So that means that when it falls from there and it hits 45% return on investment for you, you would essentially exit out of your trade. And that would be another good smart move, because you probably don't want to watch it, or, when you're in the moment, it's a lot different. And you're saying to yourself, ooh, that's 50%, but I could probably get up to 60 by the way things are looking, right? But you have to consider some of the other things. Again, sideways move, it's up near the bands, not saying like we're expecting it to get up here, but it just hasn't for the past 2 days. Yes, you have time. Obviously, yes, you would have been good. But all you see at this point when you are trading is this. That's all you see. So it makes it pretty tough. It does make it pretty tough, I'm not gonna lie. Right? This is where discipline and motion kind of kicks into play of where you have to be at. But from here, it looks like it may not break that higher high. So you can go for another day, which we saw what it did. And then you can really be like, I think I'm gonna exit, because it's not breaking that previous high. So let's go to tomorrow. Let's go to November 17th and see what it did that day. So you're at 48%, and November 17th, they're both down to the same amount. Hilarious, but that's how things work. So at the close of the day, both trades are at the same amount from a dollar standpoint. And right now, you're at, on your February trade, divided by 9,525. So right now, you're at 43%. So let's say you set up that trailing stop when it reached 50. You set it up to say if it falls 5% below this price, which was your 50% profit price, then you would exit out of the play. The system will trigger you. And with this ending at 45% and us seeing what it did that day, you would most likely have been stopped out for a 45% profit in 14 days. Congratulations. That's a positive trade. And if that was all the money that you had, you just increased your portfolio by 45% minus fees in 13 days. Kudos to you. Never let anybody make you feel guilty or say that you shouldn't trade like that, or you don't, that's risky. If you know what you're doing, then it's not. And if you're willing to take the risk, then it's not. And if it was a part of your trading plan, then it's not. You're totally fine. So let's take a real quick look, moving out to December, and let's go from December. Just go to December, middle of December here. So obviously we know where it is, and December 14th. So let's continue to move forward. But I just wanted to paint that picture to say that's not bad to get out because you're near the top part of the band. So then we pull back obviously to the mean where we're at on November 24th. I think that was before Thanksgiving. So let's go to the Analyze tab and let's just jump to it. The 24th, let's see what your profits are. Oh, look at that there. Look at that there. You'd be really salty and upset with yourself of only having $950 of profit on that day. You would say, look at all the gains I let go. $3,000+ worth of gains that you would have let go right there. But it's okay. We've all been there. And you essentially would need to experience that if you're going there as well. That's part of the learning process. All right, so 950. That's sad. Let's not even look at the ROI on that one. Let's do this. All right, so back to the chart. And so your exit point on your February expiration is about mid-December. So let's just go to the 15th, and we're at the 24th right now. And again, it looks like it's bouncing off the trend line that I drew in. So that's pretty cool. It doesn't go all the way to the bottom of the band and it starts to pull its way back up. This is a higher low than this one. That's a good signal for turnaround, higher low, and it starts to make its way back up. Let's go to 12.1 and see what our profits are on 12.1. And 12.1 profits are 6,675. So now you're like even more excited that you pretty much stayed in, right? You went through some emotional stuff right here. I know you did. I know you did. I would. I know you did. But you know you also had some time left over. Apple's good. It's a good company. You know, people are going to be buying these things during holidays, the iPhones and all that. And you did your research and your thesis still stands. So therefore, you're good to stay in that trade, even going through this. And you had some time. But now your time is going to start be fleeting away from you with how time value works and theta works. So you're looking to exit and you're looking to exit at the right time. So let's go to the first point of where it hits those Bollinger Bands. Because again, if you're going to utilize the Bollinger Bands, you're going to say to yourself, okay, it's running up the Bollinger Bands. At this point, it created a higher high than this previous high. It hasn't broken this one yet, but it's created a higher high and it's going to ride these bands here. So let's go to 12.3. Let's keep going to trade tab. Let's go to 12.3. Bam. And on 12.3, we didn't move that much. But on this day, on your February play, 6,575 divided by 9,525, you're sitting here at 70% ROI, man. Congratulations. That looks great. Never knock it. It's awesome. And this one, you're you're definitely over 50%, right? Let's just do it. Let's just do it right. Because I gotta hurry up and go. Got a chiropractic appointment with my daughter. So you're at 58%. So you're not even 60 yet, but you're at 69% on your February expiration, 58% on your April expiration. If we go back to, we go back to the chart and you're here. Now, what the Bollinger Bands is saying though, is if we're riding here, then there's a potential for some pullback. And you do kind of get a pullback after it rides so many days. So let's go to 12.10. Oh, now, since I'm rushing, I'm just being sloppy with my selection and stuff. Let's go 12.10, and let's see what the profit is that day. All right, so you pulled back on some profit, kinda, it's a little even, pretty still even of where you were on the previous day. So we're here. Did I go 12.10? So here, kind of pretty much even. You gained some money. You gained some intrinsic value in your option because of that movement there. And even when it pulled back, even though it's lower than this price, it doesn't hurt you that much. And then now you're here again at an area of support along a trend line and at the moving average, which you tend to like in the past. You got a long, what was that, Dragonfly Doji or something? And now you start to see that, oh, it could bounce here. It's creating a higher low. This is higher than that one. It did create a higher high kind of there. Oh, that's two good things. And it did its pull back. And so let's see if you can get that higher high bounce there. And you move, well, might not see it. You see that it did it. And go to 12:15. So on the Analyze tab, let's jump to 12:15. And now on 12:15, you're at a profit. $10,000, $10,500 on your February, $10,450 on your April. You're practically over 100% on your February play, and you are, you're about 90-something%, I'm sure. What's that? 10, 4, 5, 0 divided by 11, 3, 7, 5. 91%. Well, that's pretty good. 90% on that one, okay? So here you are with 100% profit on your February, and you are 91% profit on your April. Look, again, if you decided to exit out of those trades at this time, based off what you're seeing on the chart, exploded up, high volume, now it's going to start running those bands for the next few days. But if you said to yourself, I'm happy that it created this higher high, it can continue to run, which it kind of does, right? Kind of does do that there. But if you set a trailing stop to exit out, if it drops, say, 5% down or 10% down, I don't think anybody would be mad, and we'd all be happy for you, congratulating you on your short-term trade. Now, I would encourage, in this particular case, for your February, now that you've done it for 3 months, you're in it already about a month and a half. This is definitely where you would want to take your profits, or at least set that trailing stop in, and then have that locked in for you 100%, at least have it locked in at 100%. Yeah, you probably lose $1,000 in profit, but maybe set it at, 105 or whatever, 105%. You would lose a couple $100 in profit, but look at your gains, man. What's pennies to dollars? I mean, it's not minor in the major things, okay? So the major is that you're up significantly. The minor is that you lost a couple $100 and you could have exited higher, but don't be greedy. Get the meat of the move on the trade, which if you did it here, good job. You were here, you got there, you waited for the pullback. Now you got a good move and you were a little bit more patient, even though these looked really good. And then you got the pop. That's the meat of the move. It ran up on the top side of the bands. It was running up on this side of the bands again. If you exited, that would have been fine. And yeah, you would have lost on some that you had more time that you could have exited out at, but that's okay. That's okay. You're doing a short-term trade. And obviously sticking in on your March one would be beneficial to you. And let's just fast forward some time, because it just continued to do its up thing from the mid to the bands, the mid to the bands. So just wanted to do a little think back trade for you guys. The video was a little bit longer than I anticipated, but that's okay. But wanted to share that with you. And of course, until next time, continue to think, live, and be unstoppable. I'll see you guys again. Peace.